Welcome back to Classified Business Era, where we decode the world's most fascinating business trends and trading strategies. Today, we're diving deep into the mind of the man who turned numbers into billions, Jim Simons. You've probably heard of him, the mathematician who revolutionized trading. But what exactly is Jim Simons' strategy? Stick around because we're going to break it down, step by step, and maybe throw in a little math magic too. Before we dive into the numbers, let's get to know Jim Simons. This guy isn't your typical Wall Street suit. He's a former mathematician and codebreaker, a real-life genius. Simons founded Renaissance Technologies, the hedge fund that has outperformed everyone. Yes, everyone, even Warren Buffett. Simons didn't come from a finance background. He was a math professor and then worked at the Institute for Defense Analyses. He's known for cracking codes during the Cold War era. So, yeah, the guy knows how to find patterns. All right, let's talk about the Medallion Fund. This fund is the crown jewel of Renaissance Technologies. From 1988 to 2018, it produced an average annual return of 66%. And get this, the Medallion Fund is so successful that it's closed to outside investors. It's like an exclusive club where only employees of Renaissance Tech get to play. If you're in, you're golden. Now here's where the magic happens. Simons' strategy is all about quantitative trading and algorithms. Unlike traditional traders who rely on gut feelings or even technical analysis, Simons' team uses data and math models to make decisions. The core of Simons' strategy? Find patterns in the stock market that humans can't see. His team of mathematicians, physicists, and computer scientists, yup, no finance guys here, builds complex algorithms that predict price movements. Here's a fun fact. Jim Simons believes the stock market is a chaotic system, but within that chaos there are recurring patterns. His strategy relies on analyzing enormous amounts of data to find these patterns. They analyze everything from price histories to the speed of trades and even factors like weather patterns and satellite images. The idea is that every little piece of information might hold a clue to what's coming next. Ever wonder if a sunny day could influence stock prices? Well, Simons' algorithms leave no stone unturned. Jim Simons' strategy focuses primarily on short-term trading. We're talking minutes or even seconds. This is called high-frequency trading, where his algorithms make trades faster than you can blink. By executing hundreds, if not thousands of trades in a single day, they make small profits on each trade that add up to billions over time. It's like capturing every small wave in the ocean. It doesn't seem like much at first, but in the end, you've got a tidal wave of profits. Here's the thing, no strategy is without risk. But what makes Simons' approach so effective is that they've mastered risk management. Their algorithms are designed to minimize losses while maximizing gains. Simons' team uses sophisticated models that adjust positions in real time, based on volatility and other risk factors. This ensures they're never overexposed to a single position. So, can you and I replicate Jim Simons' strategy? Well, unless you've got a PhD in math and access to millions of dollars worth of data, probably not exactly, but don't be discouraged. The key takeaway here is the power of data-driven decision-making. While we may not be running hedge funds, we can apply the same principles of pattern recognition and risk management in our own trading strategies. Jim Simons turned math into billions, and while we might not be able to do that just yet, understanding his approach gives us an edge. If you enjoyed this deep dive into Simons' strategy, don't forget to smash that like button, subscribe, and hit the bell icon so you don't miss any future videos. This is Classified Business Era, bringing you the latest trends in business and finance, with a little humor along the way. See you next time. End of script.